Hello and thank you for joining us. I'm Associate Professor Hal Manassa here at Winthrop University. I teach accounting here at the university. I'd like to share a few thoughts with you today about insurance. Why we need insurance, what insurance is, how we can reduce the cost of our insurance, and along with the risk. Insurance in a nutshell is really sharing risk. We all have risk in our lives. We have the risk of illness, risk of accident, risk of loss of our property, risk of liability, risk of death. We want to find ways of minimizing that risk, but in the event something does happen, to protect ourselves. So let's spend a few minutes today talking about the kinds of risks that we have and how we can control the risk or protect ourselves against those risks. First, let's talk about health. Most of my audience today, you're young, you're healthy, but something could happen. You could break an arm, you could cut yourself and have to see the doctor or go to the emergency room. Who's going to pay for that? You need health insurance. How do they determine the price for health insurance? The lifestyle you have, your age, the amount of deductibles that we'll talk about in a minute, perhaps even where you live. So health insurance is important to protect us for unforeseen accidents or injury or disease. What about cars? Most of us have cars. We take the risk every time we get behind the wheel of a car of having an accident, the car being stolen, it being our fault, it not being our fault. What happens if we have an accident and it's our fault? Somebody sues me for hurting them. Somebody sues me for damaging his property. How do I protect myself in that case? How do I protect myself if somebody hits me and it's their fault and they don't have insurance? So we also have to have insurance for uninsured motorists. How can I reduce those risks? I can simply not drive. I can ride with my friends. I can have someone else drive. I can take the bus. In most cases, that's not really practical. So there's other ways of reducing the risk. The kind of car I drive. Obviously, a guy my age driving a minivan will have cheaper insurance than a guy who's 25 driving a Corvette. And why is that? The insurance companies have statistics on the likelihood of having an accident. Statistically, a 25-year-old guy with a Corvette is more likely to have an accident than a guy my age in a minivan. So because statistically that's the case, he's going to have a higher risk, he pays higher insurance. I have a lower risk, I pay lower insurance. So it's all again about risk sharing. Think about renter's insurance. You have computers, you have furniture, you have your property. What if somebody steals your computer? If you have renter's insurance, that will cover the loss of your computer. Even if you live in the dormitory, you live in the dorm and a fire happens and they blame you for it and you're found responsible, you need insurance to cover your liability. What about life insurance? At some point we'll all die, and do I need life insurance? If I'm a young single person, maybe not. But if I'm somebody with a family and I'm going to provide for my wife or my husband, I'm going to provide for my children, I need to have life insurance to cover me. Obviously an older person, his life insurance will be higher because the risk of him dying is greater. A younger person, the risk of him dying, because statistically he's younger, the risk of him dying is lower, his life insurance is less. But if you're a smoker, it'll be higher. If you're diabetic, it might be higher. So just depending on your risk, once again, will determine the amount of your life insurance. General liability insurance. If I make a slanderous statement, if I make a libelous statement, if I write something that's not true about somebody and I publish it and I hang it on posters around the university and it damages that person's reputation, I might be held liable. I might be sued for that. My liability insurance can help protect me in the event that I'm sued. When you finally decide to buy insurance to protect yourself from those risks, how then can we reduce the cost of our policy? We have something called the deductible. The deductible is the amount of the risk that I'm assuming. I pay the first $100 and the insurance company, they pay the rest. So now the insurance company's risk is anything beyond $100. My risk is only $100. If I increase my risk to $1,000, I have a $1,000 deductible, I've reduced the risk for the insurance company. So their premium will be lower. So it's all about risk. If I take on more risk, my premium's lower. If I take on less risk, my premium is higher. So it's about sharing the risk, reducing the risk, eliminating the risk. As you grow up, these are the responsible things to do to protect yourselves, protect your family, protect your property. Thank you for joining us. This is Professor Hal Manassa at Winthrop University.